Thank you very much, Alain, and welcome to this presentation on Endeavour. We're a diversified mining company, which means that we not only produce metal, we develop new mines, we explore for new discoveries. And my plan here today is to really touch on the mining side and then spend more time on our development projects and perhaps even on our exploration projects. So without further ado, Endeavour Silver, building new mines, new focus on growth. I will be making some forward-looking statements today, so you are duly cautioned. And by way of introduction, we are a mid-tier precious metals miner. Our guided production this year is in the 8.5 to 9 million ounces of silver equivalents for the year, of which about 5 million ounces is silver and 50,000 ounces is gold. We don't produce any copper, lead, or zinc, so just a pure silver gold producer. Our core assets are 3 high-grade underground silver gold mines located in 2 historic mining districts in Mexico. And part of our business model is from time to time to make strategic acquisitions, such as mine number 4, the El Compass mine, which was acquired 18 months ago. It's now in development. We published a PEA this year with robust economics, and we'll see production starting by the end of the first quarter of 2018. Another way to differentiate Endeavour from the silver mining group is our operational excellence, because again, our business model typically buys small mines in historic districts that are in desperate need of love and attention and money and expertise. We bring operational excellence to the table to turn those mines around, refurbish them, bring them back to production, and ultimately expand them. And of course, we live and die by the drill bit. Many of these mines are closed or closing because they ran out of ore. And the value proposition for our shareholders is that in these old districts, there's been very little historic exploration, modern exploration. So we see tremendous opportunities to make virgin discoveries in historic districts that can be fast-tracked to production. And last but not least, we've been these last 5 years in the bear market focused on optimizing our 3 existing mines. But now with the appearance of a potential new bull market, we've changed our focus to growth. And we're proposing to build 2 to 3 new mines over the next 3 years. It is the best organic growth profile in the silver mining sector. Our core assets are all located in Mexico, head office in Vancouver, exploration office in Chile. And I'll just touch on this organic resource growth slide. This is everything we've done since we started the company. I'm the founder, went to Mexico in 2003 looking for assets. And effectively what you see here is 9 years of aggressive resource growth. And then when the bear market hit, 5 years of basically flat line, focusing only on replacing reserves, not growing our resource base. And now with the resumption of the bull market, a new focus on growth. That kind of organic resource growth allowed us to deliver strategic production growth. Again, 10 years of tremendous production growth in the bull market run from 2004 to 2012. But since that time, we've seen a slight decline in our production. We didn't see the wisdom of pushing more and more metal out at lower and lower prices. And that came to a close. That phase of our corporate development came to a close with the bounce in 2016, and now we're focused on growing our production again. One of the biggest achievements of our group during the bear market was our ability to reduce our costs. All-in sustaining costs we took from $28 an ounce down to $12. They're going to climb back up this year. I think year to date they're sitting at about 18. That's because we've been willingly investing our cash flow in long-term exploration and development projects to ultimately reduce our costs and grow our production. Some highlights from the third quarter. We announced $1 million of net earnings, $7 million at the 9-month mark. And both our EBITDA and cash flow and revenues are all up in Q3 compared to Q2. So the trend is now in the right direction with production rising and costs falling. Really, if you reflect on our financial and operating performance this year, it's a story of one mine. Our Guanaceví mine, our first mine, had a horrible start to the year. It really dragged down our consolidated performance. It was a series of unrelated events that I think our guys did a marvelous job getting through. We broke into a hot spring and had to rebuild our pumping and ventilation systems. Obviously, it caused the highest grade part of the mine to flood. We managed to re-access that part of the mine at the end of June, only to have lightning strike our substation, which knocked out the pumps and caused the mine to flood again. So you can see that we've dealt some pretty tough cards by Mother Nature this year, but we got through them all, and now we're seeing month-on-month improvements as Guanaceví comes back to good health over the next 3 quarters. We did commence the development of our 4th mine at El Compass. We acquired several other exploration properties in that district of Zacatecas where El Compass is located. We received the mine and plant permits to build our 5th mine at Terronera in August. We're still waiting, though, for the dumps and tailings permits. Hope to break ground on Terronera in the 1st quarter. We released high-grade drilling results, an exciting new discovery at Terronera, some more high-grade results at Guanaceví, and we strengthened our management team, basically creating the position of VP Engineering, partly to optimize our existing mines and partly to lead the project development group. Obviously, building 3 new mines in 3 years requires an expansion of our management capabilities. Quick tour of the mines. Guanaceví, our first mine, acquired in 2004. It's the only mine that actually produces doré bars, which we pay to have refined into pure bullion, and that allows us to time our sales into the market. It's our largest silver mine. In other words, it produces almost half of our 5 million ounces per year. A little bit of gold as well. We control the west and north ends of the Guanaceví district, which is the 5th largest historic district in Mexico. We have made 7 bona fide discoveries along the Santa Cruz vein structure since 2004. 2 of them are exhausted, 3 of them are in production, 2 of them are in development for production next year. And our outlook, short-term outlook, is that even though Guanaceví is the only mine this year that was performing below plan, it is now finally coming back in line. And we expect that Guanaceví will return to good health with higher production and lower costs over the next 3 quarters. So top 5 Mexican district. Moving to Bolañitos in Guanajuato. Bolañitos is our lowest cost mine, has been for many years. It's literally a cash cow. The gold produced at Bolañitos typically covers not just the cash costs, but the all-in costs of mining, and the silver is effectively free. The only frontier left to improve our performance is on the recoveries, and we're currently doing optimization in the plant to try and boost our recoveries another 4 or 5%. And it is in the 2nd largest historic district, the District of Guanajuato. And again, at the bottom of this slide, you can see our cash costs are negative $5 year to date, and the all-in sustaining costs $1.89 per ounce of silver produced year to date. Last but not least, El Cubo, acquired in 2012, also in the District of Guanajuato. It's our largest metal mine by metal production, that is combined silver-gold, and it was our biggest operational turnaround. Many of you who have been shareholders in the past know that was a tough project for us, but we managed to get the all-in costs at El Cubo down to $13.50 last year. It is now a core asset. And the main event in Q3 was an expansion of our tailings circuit. Therefore, the Q3 all-in costs were higher because we expensed those tailing costs. But we expect now El Cubo costs will come back down to the recent historic norms of $13 to $14 per ounce. There's also optimization underway at the plant with targeting 2 or 3% improved metal recoveries. Let's move now to the development pipeline. Up next, mine number 4, El Compass, in the state of Zacatecas. What you see portrayed there was a dormant government mill. We took a 10-year lease on that mill for $7,500 a month. I pay more for my head office and monthly costs than I do for that plant. El Compass represents near-term production. We made a production decision in July. We started developing the mine in August. We started refurbishing the plant in September. We'll be delivering development muck to the plant in February and start drawing ore from the mine in March. So we're expecting initial production by the end of the 1st quarter, full production during the summer of next year. It's a tiny mine, but very high grade with a very accretive impact on our cash flow. So what's tiny? 200 tons per day is the proposed mine plan, but almost 9 grams gold equivalents or 700 grams silver equivalents grades. So a very attractive high-grade opportunity to generate cash flow. Estimated all-in sustaining costs less than $10 an ounce with an internal rate of return higher than 40%. So a very attractive high rate of return project developing our 4th mine, and there you can see the all-in costs at $9.64 per ounce. This mine is already permitted. We bought it as an already permitted mine, and as I mentioned, we leased the plant. So here you see a pictorial just showing the area of the mine access ramp in the light blue, accessing the El Compass ore body in the light blue, and then a dark blue ramp down to the second ore body, El Arito, in the dark blue. Moving on now to mine number 5. This is perhaps the most exciting discovery of our exploration group since we arrived in Mexico. It is the jewel of our development pipeline. Terronera is located in Jalisco State and represents potentially our largest mine and one of our lowest cost mines. It is literally an entire district of 50 old mines located on 20 separate vein structures, none of which had ever been systematically drilled. We've made a discovery here in recent years. We released a pre-feasibility study at the end of March. We're currently estimating all-in sustaining costs at less than $5 per ounce. We received the mine and plant permits in August. We're waiting for the dumps and tailings permits in the next 3 months or so. And there's still several exploration targets to grow the resource base and expand the proposed operation. This is the first discovery. It's 60 million ounces of silver and equivalents. And again, there's no copper, lead, or zinc. It's just silver and gold. The split is about 65%, 35%. And this discovery is still wide open at depth into the southeast. At the bottom, I don't expect you to read some of these results, but on the left you see some of the typical Terronera results, up to 16 meters true thickness of high-grade material. Typically several hundred grams of silver and several grams of gold. On the right side, though, you'll see a new discovery called La Luz, just to the north of Terronera and quite close to our proposed plant site. And the La Luz discovery is almost triple the Terronera grades. Very exciting new find. So developing our 5th mine at Terronera with all-in sustaining costs estimated below $5 per ounce, breaking ground in the first quarter of next year. Last but not least, Parral. All I'll say here is that we acquired this project barely a year ago for $6 million in stock. It is yet another historic district in Mexico. It is potentially our 6th silver mine. We acquired a 32 million ounce historic resource. Up until 1990, this mine actually produced 4 million ounces a year. Closed in 1990 and left behind 32 million ounces. We're currently drilling. It's our biggest drilling project this year with abundant high-grade targets. All the gold, red and purple triangles are high-grade samples on surface that have never been drilled. Moving now to wrap up, Endeavour shares have had a tough year, down 40% on the year. That's largely because of Guanaceví. So all of the troubles at Guanaceví are factored into our share price. None of our growth is factored into our share price, and as a result, we're very attractively valued relative to the silver peer group. 127 million shares out, currently trading at around $2 US, call it 270 Canadian, and very good liquidity. We trade 2.2 million shares a day between Toronto and New York. Working capital, very healthy $70 million, cash almost $45 million, no debt. Van Eck owns 7%. Fresnillo, interestingly enough, the largest silver miner in the world, has a strategic toehold at 2%. 10 mining analysts cover the stock. So to wrap, catalysts for value creation for our shareholders. In the short term, obviously, improving the Guanaceví mine to get it back on plan should have a positive impact on our operational and financial performance. Completing the development of El Compass and bringing it to production, clearly a value-added proposition for Endeavour. Getting the rest of our Terronera permits, you'll see some significant drill results from Parral coming up in the next few weeks. So all in all, a busy time as we transition from 3 mature mines to 3 new mines. Thank you very much.
Thank you very much, Bradford. Do we have one question before we upload? I have one question for you. Terronera, what could delay the decision to go into production? Because it's such a crucial asset for you.
I don't think it'll be the decision that's delayed, but rather the Mexican government. They're entering into a presidential election year, and we have already seen a slowdown in bureaucracy as the senior bureaucrats try to align themselves with the winning candidate. We're trying not to let that interrupt the flow of our permits, so we're seeing the most senior people before year end, and we believe we'll have our permits. There was one more question actually in the room.
I was just going to say, based on your cash flow, balance sheet, assets in production, I understand you have the issue of
Well, like I said, I think all of the problems are factored into the stock price, and the markets now from Missouri, they're waiting to see how we do. And we delivered a good third quarter compared to the second quarter. We made money in the third quarter, and I think you'll see better in the fourth quarter. I think maybe the fourth quarter will help to turn the market on the stock price. Thank you very much.
Thank you very much.